Yeah, we'll go and have a look at a few different ones here. Starting off with the option expiry ramp in the Bund. I think this, not the run up, I don't think that was obvious necessarily, but the reversal seemed very obvious. And this is one point I do want to make. Just because what happened seems obvious doesn't necessarily make it overly tradable. It's easy for me in hindsight to go, that was a really obvious sell. And I think from the perspective of what the market could do on the back of this run higher, I still think it was an obvious sell. You've got to question whether you could actually sell this. And that's one thing I'll show you in just a moment. We're going to have a look at this move up here, what I would call an elastic band move. The fill in, another elastic band type move. The highs on payrolls. Yeah, we're reacting off really, really obvious points. Even when you go back down, pick your level. Previous highs, where we turn from on this day, and we react off it. There's a lot of stuff where the market goes to where you think it should go to. I do think oil's been doing the same. It's pretty endemic. Everything is doing these types of things. And this is a symptom of markets not really having a great deal of drive in them, of markets having already done rather a lot from the beginning of the year. Why do people now need to be investing hard into any of these markets? A lot of the larger portfolio movements may well have already happened at the beginning of the year. I can't know that for a fact, but from what you're seeing in the way markets are trading, you have to also infer that that's the case. Now, whether that is or isn't, the expectations of this quite mechanical, orderly movement should still be there. You never know whether you're right or wrong on this assumption, but it doesn't matter because you trade on the back of it, and until you get proven one way or the other, right or wrong, the idea and the assumption continues to work. Similar with the S&P. I'll come back on to having a look at some of those examples in the Bund. But post the Nvidia move, we've then had a nicely balanced market. I don't think that should be any surprise to anybody that the market balances out after such a large move. That all makes sense, but it balances out on top of previous record highs. So it uses previous highs and it holds them. Now, this isn't to say, well, just after Nvidia, buy the previous record highs, sit long all week and watch it go up. We're not trying to look at it that simplistically and sort of go, oh, hindsight, wonderful trade. But what it can do for you is say to yourself, well, until, and this is the way I try and sort of look at these types of things. Once equity markets in particular have decided they've got a direction, it's easier to just stick with that. Despite the fact that, as I've heard so many times, really coming from November last year, that surely equities can't have gone this far, this fast and sustain it. Now, I remember this being said when the S&P retook 1200 as a record high, when the S&P took out the highs pre-COVID, and everyone thought, well, no, surely it can't keep on going, it can't do that. Well, no, maybe it can't. Maybe it doesn't make sense to do that. But whilst it perhaps doesn't make sense, it is doing it. And I think sometimes you have to go off the evidence of what you're seeing rather than your own view that it surely can't keep on going. Well, if everyone thinks it surely can't keep on going, there are a lot of the people who are then going to be the reason that it does keep on going, because they sell it and then they get stuck having to buy it all back. I'm sure that happened here in quite a big way. But again, this was one where you look at the S&P when it was up here and you go, right, previous high, previous highs. If you get through there, do you think this can go down? It makes sense to trade through this previous range. Absolutely. But think of this from a longer time frame perspective. As it comes down, does buying the previous lows, the previous record high look like a good idea if you're a little bit more long term? Yeah, absolutely it does. I'm not saying that everybody must just go, all right, it's back down there, just buy it and sit there. But until there's a solid reason to change your view on where this is going, you have to question whether you really should. Even with the drop back post payrolls. Market drops back, this is the move post payrolls into earlier on today. Until you get down below here, I don't think this really changes the overall direction of the S&P. So you can maintain your bias. What this helps you with is the ability to look at the market and go, okay, I'm looking for chances to buy. Whether that be a drop and a buy at support, somewhere let's say around 51.50, whether this is as has worked rather well recently, buying it through previous record highs. Each time we go through the highs, you're getting, it doesn't have to be a spectacular move, but you're getting 10, 15 handles every time you go through record highs at the moment, it seems. Again, it's just those little trades where you can keep on looking for those. It's doing the simple stuff. I think, good question from Chris here. Do you require less confirmation from order flow when markets are trading this way? I was talking to one guys here about it earlier. I think to a degree, yes, or more to the point, you require less presence of something and more the absence of it doing anything else is enough to make a level strong, for example. If your view is that the S&P is going up until at least it's back below here, so around 51.24, if that's your view, then an absence of selling is enough to justify buying, is the way I kind of try and look at this. It makes your life a little bit easier in that sense that you go, well, it's come down, nobody's driving this through the lows, I can have a go at selling this. I can have a go at buying this. And until anyone does, what you're doing is you're putting yourself on the side of all of the people who are also probably minded like you, gonna buy it when it drops down to a level. And if it doesn't drive through, then the people waiting for a little bit of confirmation now have to start to get in. They're the people who get it off the low, and that then enables others to now look at, okay, this isn't going down anymore, now we can come in and buy it, which gives that sort of extra leg of conviction. You see the S&P finds it a lot easier to go up at the moment than it does to go down. You know, these sort of smooth moves off low, continuation moves through high, continuation moves through high. Downside, far, far more choppy. Even if it does have a quick reversal in it here or here, the reversals are quite short-lived and very quickly people are coming back in. Until that changes, I see little reason to change your mind on what's going on. Yes, you'll get burnt on a couple of trades, but equally you're going to be on a huge number of trades that actually go and go and go. If we come back over to the Bund of late as well, as long as they're absorbing the selling and it's not too much pullback, S&P long example, yeah, absolutely. I think my view is as long as they're not driving through anybody who absorbs it. Yes, what this does say to you or suggest is that over time, people are getting longer and longer and longer at higher and higher prices. They are vulnerable, but they're only vulnerable if the market starts to turn. And unless it goes back through where people have got in, they're not vulnerable. You know, if we go over, for example, to the S&P, these lows do not look good down there. That looks like a vulnerable low. It's a poor looking low. You know, you get the profiles up on the S&P. In fact, I'll bring them up for you. As you can see down here, 2 TPO low. We've hit the same low multiple times. Another 2 TPO low down here. These don't look like great lows, but until we actually get through them, anybody who's been buying it down here has been put under very little pressure and the market's gone higher. So yes, they're probably quite weak if you ever get down there. But until that happens, you can then look at this and assume that, well, we don't go down there. You look at where the S&P started off today. I'll cancel that because of the time change. But would you expect reaction up towards yesterday's lows? Yeah, I probably would expect reaction there. I don't know where the S&P is trading right at this point in time. But you were trading up, we traded 88. So we have just traded into the single print. If it doesn't stay up there, then you look for a roll back down into where value is established for much of the day, down towards 78.